Hi dear traders, the US dollar saw a sharp rise following the results of the annual Jackson Hole Economic Symposium. Fed Chairman Jerome Powell stressed the need for more rate hikes as the fight against inflation is not over yet. This statement boosted demand for the American currency. The US dollar index, which measures its strength against 6 major currencies, went above 104, its highest value in the past 11 months. The demand remained steady even when the Fed chief clarified that in September the regulator may pause the tightening cycle to evaluate the incoming data and possible risks. Following this sentiment, the euro was moving towards parity against the US dollar, although it still has 800 pips left to reach this level. In fact, the downbeat macroeconomic data from the Eurozone may well result in the euro hitting parity against the greenback. It seems that in the most optimistic scenario, the largest economy of the region will soon face a recession or at least enter a phase of stagnation. The European Central Bank cannot allow a further rate hike under such conditions. The US dollar is the main beneficiary of such a big disparity between the monetary policies of the ECB and the US Federal Reserve. The state of the UK economy is also far from being perfect. The data on business activity indices suggests no improvements ahead. Yet, the British Central Bank is unlikely to abandon its hawkish approach. Although inflation is slowing down, it still stays at elevated levels, far from the desired target of 2%, not to mention the high base. In July this year, consumer prices accelerated to 6.8% compared to the same period last year, when the indicator stood at 10.1%. Apparently, this data is discouraging for both investors and UK monetary officials. Yet, the pound sterling is still retreating against its American counterpart. In the meantime, the Japanese yen has been hovering near the critical level for several weeks now. In the fall of last year, Japan's monetary authorities intervened in the foreign exchange market when the dollar-yen pair was trading at these levels. As for now, the yen has a slim chance of a recovery as the US Fed continues to raise rates while the Bank of Japan pursues an ultra-loose monetary policy. At the same time, the recent meeting of the central bank governor and the Prime Minister of Japan to discuss economic prospects may signal some possible changes. Gold also retreated under pressure from a stronger US dollar, although the prospect of the ECB maintaining the rate at high levels somewhat offset the impulse that the greenback received from the Fed. The precious metal stayed above $1,900 per troy ounce. However, gold has been trading with losses for the past 4 weeks. Oil was trading mixed as the market was evaluating global supply and demand, a rise of the Fed's interest rate as a threat to the US economic growth, with the US being the largest consumer of oil. However, the fire at the Louisiana oil refinery and reduction of oil rigs shifted the focus away from pessimistic forecasts and helped oil quotes close the week at the opening levels. In addition, voluntary cuts in oil supplies from Saudi Arabia and Russia provided support to the oil market. On the other hand, Iran has recently ramped up oil exports to Chinese refineries, reaching the highest supply volume of 4.5 years despite US sanctions. These are the trends of the last trading week. Do not miss our daily news reports to be always in touch with the latest events. See you!